Where do you see markets going from here? So we've had quite a lot of ups and downs, and then that kind of the sell-off yesterday that really came from, I guess, anxious investors looking at the interest rates.
Yeah, thanks, and good morning from my side. Thanks for having me. I think we indeed, as you said, saw a quite tumultuous February with volatility, I would say, making a comeback because we have seen 15 months of positive gains in the S&P, and this is the first negative. The question is, where do we go from here? Being now in March, I think we have to live with a higher level of volatility. So if you look at the average volatility, the level is probably higher, simply because markets are now need to digest the turnaround in interest rate strategy of the central banks. And I think yesterday what we saw on the sell-off at the very end of the market session is still some fears that the US economy is probably too strong and the central banks, especially the Fed, then need to hike too fast, and that, of course, need to be digested by the markets. However, our view is that we don't need to change strategy. The earnings and the economy is still quite okay. And we don't think inflation is coming back very quickly. Right,
and we'll get to emerging markets in a second. But Christian, do you worry that the U.S. economy is overheating? And we've been told over the last couple of days, I mean, Janet Yellen had a very similar kind of, blueprint for the future, but the markets reacted a couple of weeks after that.
Yeah. No, it's true. I think there's certainly a risk that the economy is overheating because there are additional pushes like tax reform, infrastructure program coming in. And yes, we need to watch that. However, I think what's key for the market is eventually interest rates, and their inflation, I think, play a key role. If you look at inflation, inflation eventually is mostly driven by inflation expectations, and that's driven by wages. And if you see what we see on the productivity side in the US, I think we see increasing productivity, but not as fast as probably as in the past. So we need to watch it, but we are not saying we need to completely change the inflation picture.
Lupin, what does this all mean for emerging markets?
Well, I think emerging markets have been weathering the storm quite well. So we do agree that the market is going to go through a period of indigestion. But for emerging markets, valuations and real yields are actually relatively high, and local yield curves are relatively flat, which means that they're pricing in quite a lot of hikes relative to what the market expects the Fed to do.